In testimony before Congress today, Fed Chair Kevin Warsh, though, warned that the job in fighting inflation is not finished, saying the central bank will stay focused on bringing prices down. So let's put it all together with Doug Flynn from Flynn Zito Capital Management. No mission accomplished from Kevin Warsh. I got to think that, he knows, like we all do, we're still at war and the war's back on Iran. So that this is backward looking, doesn't include what might happen in the future. Where's inflation stand and where might it go from here in your view?
Yeah, it looks, obviously it's much better. We thought that last month was a spike because of the gas price spike. Gas prices went down 50 cents during last month per gallon, so that has a direct impact on everybody. And the greatest thing about this, I think, the inflation report was not even just that headline number, but the core number, which is what the Fed really looks at, also went down to 2.6% year over year from 2.9, which was a really good number. And that's the number that they're trying to get to 2%. So we're back on track to getting more towards the Fed's target, if you will. But there's no doubt that that means that people have a little bit more money to spend, and that is happening. And so things overall are pretty good, and that puts the Fed back in a position where maybe they just don't have to raise rates. We're back to neutral, not officially, but that's where we're kind of going. And then maybe we get back to that rate cut, which everyone's kind of hoping for.
And don't be afraid that there is a task force working on all of this. So here's Kevin Warsh, the Fed chairman, part of his testimony today before Congress. This is what he said.
Well, it's one data point. The reason I create a task force on data is I don't want to overread or cherry pick data. There might be some that look at this morning's data and say, oh, mission accomplished, everything is swell. That is not my view. And I would feel more confident if we had better data to inform our decision making. We have a task force that's going to be focused on doing just that.
There you go. You like this guy, Warsh, Doug? He seems well respected from Wall Street, generally speaking. Is that fair?
I think so, definitely. And he came in sort of making it the case that he's not Trump's lapdog. That was kind of what he tried to do, come out and said he would raise rates. But I think that was a little bit of posturing, because we all thought that rates would eventually not have to be raised, and more to the point that inflation would come back down, especially because it's tied so much to oil prices. But here we are. I think that the reason we're talking about all this is because just in the last week or two, we've seen what happened with oil prices, and then gas prices have ticked up a couple of pennies per gallon in that lag, and that's the risk. This may not get solved overnight, as we know, and we keep seeing it going back and forth, and so that has a direct impact. But overall, the trend is definitely good, and it's not just gas and energy, it's across the board. There's a lot of other lowering inflation things happening, and so that's a good sign.
There are. Like, I'm looking now, we'll pop it up from the telestrator at the big picture. It was just in May the highest in 3 years, so obviously you're talking about trends. That's the one you like to see. We're going down from there to there.
Yes.
On gas prices, this you could say, okay, trend is our friend here as well, right? If you're saying down 15% from the wartime peak, but this is still an elevated number, 386, and it could become more elevated if the war continues. So that's kind of in the back of all of our minds. In the front, in terms of Wall Street today, I just want to get your view on this as well. The banks, okay? So here's the second quarter profit reports, just year-over-year profit increases for the big banks. Goldman, 78%, Citi, 45% increase, JP Morgan Chase, 41%, Wells Fargo, 17%. Now, JP Morgan had its most profitable quarter ever. So talk to us about the banks.
Yeah. So, all the banks across the board hit on a lot of numbers. Basically, what happens is banks have good parts and bad parts, but on any given quarter. But this quarter, kind of everything worked, and so that is not a common occurrence. But they won on stock trading, on IPOs. We saw some SpaceX IPOs and other things. So they make a lot of those investment advisory fees and all of that. And in all of that, you also had really solid consumer activity and spending. So that all meant that the banks had record earnings and are doing really well. Now, it's kind of a precursor to the general economy. It's not the only part of the economy, but it is a good indicator to take a look at. So you mix this, good signs, the AI boom and all of that, and a lowering inflation print, and you have things that are maybe a little bit better than it feels right now. That's the way it seems.
Better than it feels. We keep hearing about that for years, unfortunately. But yeah, we're going to wrap up this war and see where we go from there. Thank you, Doug.